Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. To start things off today, I have to observe that we have 5 of the FANGs more or less right at or very close to key breakpoints, and investors are presumably looking for a direction to go in. The uncertainty lies in the fact that there's a very good reason for this, and that is that the overall NASDAQ itself is within 5% of its all-time maximum valuation's HB1 price, or 9.5 times book, where it has topped out twice now in the past few years. Of course, the center of attention remains NVIDIA. But here the market is facing a real conundrum. Taiwan Semiconductor has just reported a blowout quarter, indicating great strength in the artificial intelligence arena. But at the same time, ASML Holdings, which develops, produces, markets, sells, and services advanced micro semiconductor equipment for the chip makers, has reported poor sales and earnings, with a poor outlook to boot. So it appears that things may be great right today, but the future is fading away. And get this, both stocks are off in the market today. I'm reminded of an old trader's adage: the market only pays once for great results, not twice. And if you are expecting that I will be wrong with my call on NVIDIA because Jensen Huang is carrying on about how great the demand for NVIDIA's chips is, remember that the market has already paid an extreme valuation up at its HB8 once, and it is not likely to do so again, especially if it appears, as it does, that the future outlook is likely to be fading away. Anyway, without further ado, let's take a close look at the FANGs for this week. As always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's go and take a look at NVIDIA, which has been riding its HB7 price. Now, it's been going up at a fairly good clip, eh? So the stock is doing well, as I say, just riding its HB7. And now, of course, the question is, can it break out and go to the HB8? Or are we kind of looking at a bit of an extreme, because we have seen the stock trade either side of its HB7 for some time now? Well, let's go and take a look at some of the other AI stocks. And, well, we can start off with Amazon here. Amazon has been, well, you can see it's been riding its bubble price now for, more than a year, eh? Had a little setback, but quickly got back on side. And I think one thing that one needs to remember, that if one had just stayed with Amazon, you know, you'd have done all right, because that growth, that balance sheet growth there, is running at about a 23-24% annualized rate. So just being there is positive. Microsoft, well, first of all, let's go and take a look at the fair market value for Microsoft. I mean, here is one of the AI platforms, and where are the customers' yachts? Where are the sales and the earnings coming through from AI? You can't see it when you look at the fair market value for Microsoft. And indeed, the stock is just kind of slowly drifting lower to its HB1 price, where we will review it when it gets there. Well, Alphabet had just that beautiful, that perfect hit at its mid super growth price. That's 5.5 times book value, and has bounced, but it's kind of sliding over here at the present time, and I think you can probably see why the earnings growth and therefore the fair market value has been flattening right out. Now, Alphabet is cheap relative to most of the FANGs, but nonetheless, you still have to have something to drive it. And as I say, when I look at the fair market value, I don't see it. We would certainly want to hold for now because we had a perfect hit and buy at its MSG price, but let's not count our profits before we have them. Apple, let's take a look at Apple. Can you see? I hope you can see the dotted line there. Apple has just been banging right up against that technical resistance level, and has moved more or less sideways, and has now reached its HB6 price. I'll be interested to see whether the stock can go through that, or whether it holds. And now, you know, when I look at the sales and earnings of the company, I do not see the reason to be overwhelmingly positive about this stock, or why it should maintain its market cap of $3.5 trillion either. Meta had been doing quite well. Just in the last 3 or 4 days has kind of rolled over a little bit abruptly, and we'll see. It's not quite as cheap as Alphabet, but it is one of the two cheaper of the FANG stocks, and we'll see whether it's able to carry on higher. I had been expecting that if the NASDAQ, or maybe I should say when the NASDAQ reaches its HB1 price, again 9.5 times book, that it may drag Meta up to its HB1 price too. So it's an untested hypothesis, but nonetheless, we'll see. Tesla, well, I'm delighted that I held on to my negative feelings about the stock, even after it had gone all the way up to its HB2 price, because it has abruptly let go in the past couple of weeks and set back to its HB1. When I look at the fair market value, I mean, look where it is, down here, 73% below the current price, and the outlook for car sales, let alone electric vehicle sales, very questionable in my mind. However, it's a gloomy day indeed that doesn't have a little sunlight in it, and the sunlight today is Netflix, which reported absolutely blowout earnings, and today has leapt some $68, or close to 10%, up to and over its HB2 price. And you'll remember that I had been saying for some time, I think it could do it, but I have to see it first. Well, we are looking at it, and now the question is, what next? Anyway, to briefly recap, off the top, NVIDIA is riding its HB7 price. That's 43 times book, but has not broken higher to any significant degree, despite loud cheers from its CEO, Jensen Huang. Despite the absurd valuation of the stock, and it is absurd, I expect that he still wants to have the biggest market cap in the world. For sure, there has been good estimated growth in its balance sheet, and therefore its structural pricing, due to very robust earnings forecasts. But future sales and earnings are in doubt, and I am still from Missouri as far as the real business impact that artificial intelligence will have on the economy. The big question to me is, in a correction, how far down would the NVIDIA stock price be? And to back up that concern, the SVA action of the three main AI platform stocks, Microsoft, Amazon, and Alphabet, continue to deny much hope for explosive growth in this field. The price and valuation action of Microsoft is very non-committal, and the shares remain right in the middle of two breakpoints. I would still treat it as a coin toss in the shorter term, which, as I said before, is a poor way to invest. Amazon is clinging to its bubble price, 7.4 times book, with huge potential downside in its fair market value measure risks. But so far, so good. For now, just holding is not a stupid strategy, as the balance sheet growth is running at more than a 20% per annum basis. However, if the NASDAQ reaches its HB1 price and the bubble price does not hold, then a sell will definitely be in order. Poor Alphabet is under attack from the Department of Justice, half the U.S. states, it seems, and much of Europe. Does not seem to pay to be too successful, it would seem. All this has halted the upwards progress of the shares after their perfect hit and rebound off their MSG price. That's 5.5 times book. Where, as you will recall, I observed that we got a perfect SVA buy signal. Compared to most of the FANGs, the shares are reasonably valued, and I guess buyers should hang in for now. And who knows, if the company is broken up, maybe the sum of the parts could be greater than the whole. Meta has slipped a bit this week, but remains a hold. Certainly, if the NASDAQ reaches back to its HB1 price, that's 9.5 times book, then Meta surely could easily go that extra mile to its own HB1 price. I keep observing that from the point of view of pure technical analysis, Apple would be a hold, with the hope that it can break out of its current flat trend. From an SVA point of view, I would watch that HB6 price, that's 33 times book. However, the overall market may give us our marching orders for this stock, and I would wait to act. By the way, that means either way, sell or buy. Tesla rose almost dead to its HB2 price, a key SVA breakpoint, and has now set back one breakpoint. Thankfully, I had remained bull-headed and maintained a sell on the shares, and I'm glad that I did, as in the past 2 weeks. Clearly, I'm in the right camp. Finally, of course, that really big news, Netflix is blown out over its HB2 price. That's 12 times book on superb results and could now be heading back to its all-time high, which is 2 breakpoints higher. That's about 50% from here. I kept saying that the proof of the pudding would be a breakout, and now that has occurred. I still suspect that the leadership of the NASDAQ will be crucial going forward, but you can buy the shares as you like now. Now, the more cautious among my viewers can keep in mind that when we do get a breakout, there is almost always a breakout pullback to the structural breakpoint, but not always. Anyway, that's all for this week. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and the senior portfolio manager at McNichol Associates Asset Management, reminding you that nothing, Including investing is difficult if you have the right tools. I will see you next week.